Hi, this is Benjamin Day with Pikes Peak Urban Living and Selly Group Real Estate presenting the Market Peak real estate data for the month of May 2013 compiled from the Pikes Peak Association of Realtors, MLS, and a few other avenues like Case-Shiller. Case-Shiller's screaming right now. It's up 10.2% for the nation. If you're looking at the 20-city composite, the 10-city and the 20-city are mirroring each other. There are very few cities out of that 20-city composite that are not showing double-digit gains, and they're still showing 3 to 5% gains in places like Boston and New York City. But almost everything west of the Mississippi is showing double-digit gains, some places up as much as 20%. Colorado Springs is not doing quite as well as the Case-Shiller. We're actually lagging on the Case-Shiller's numbers. But what's appealing about seeing the rest of the country doing well is that we're a very relocation-sensitive marketplace. And the relocation buyers like to come in and look at listings like Hannah's there at 2302 Afton. Nice new listing for $279. What's going on around here? Well, we scored these based on the backgrounds with the numbers. So if it's in the black, it's really healthy. And the closer it gets to red, that's where we've got a few concerns as to what's going on in the marketplace. So right now we'll start with 1,112 single-family units closed. First time we've crossed the 1,000 unit bellwether since July of 2007. It had been 6 years since we had a month with over 1,000 sales closed. There's one. We'll probably have one or two more this summer. Right now we have 4,233 listings that have closed for the year. We're actually ahead of 2007 sales pace. 2007 was the third healthiest real estate year in Colorado Springs history. We're 11% off the pace of 2006, so that gives you a little perspective as to just how strong the market is right now, giving you some comparisons to marketplaces that were known as extremely strong in terms of units closed. That is the second lowest number we've ever seen for months of inventory based on a single month. That was at 3.13 months in August of 2005. That was the only month in the year of 2005 that was less than 3.3 months worth of inventory. Therefore, it's the only month that was ever better than our month in terms of the tightness of the marketplace. People are complaining that it's hard to go and find something to buy. It's not necessarily true. There's lots of listings that are coming on the market. They're just selling, and they're selling quick. The average sales price is strong. It's $249,700. That's up 7.5% for the year. It's up 7% compared to last year. And the pendings and under contracts remain furious at 2,143 properties waiting to close. It's 12% higher than last year, 20% higher than the 4-year average. It's even higher than it was just last month. But the median sales price is about the same as it was last month, and it's about the same as it was 1 year ago. It's still higher than most of 2005 and 2006, but another characteristic that we're seeing in our marketplace now, as we had it in the previous boom year of 2005 and 6, is that the higher end properties are starting to sell, and that's why the average price is moving away and the median price is starting to stabilize. Looking at the new single-family units, we've seen a lot of listings come on the market. We had 16% more come on the market in the month of May than we did the previous May of 2012. And that's consistent with the year. We're up 16.2% for the year in terms of total numbers of listings. We're at 3,645 listings on the market. That's more than we had this time last year. Now, this time last year, we were at a 12-year low. You had to go back to the year 2000 to find fewer listings on the market in the month of May. And we're only 30 or 40 units higher on the marketplace now than we were this time last year, and our sales rate is up 20%. But we should note that we're no longer at that all-time low of inventory. This is the one that's a bit alarming. 4.1% is today's present 30-year interest rate with no points. It was at 3.54 just 3 weeks ago. The last 2 weeks have seen the bond market take a bath as Wall Street has soared over 15,000, and the investment dollars that usually fuel those super low interest rates are just not there. In addition, the Treasury Department is talking about reducing the quantitative easing, if not eliminating it altogether, and we could see an interest rate spike continue through the summer months. Now, looking at some of the barometers of the marketplace, the pending sales are strong. Sales rate that we're seeing right now is very similar to early 2007. If you look at the last 6 years of supply and demand, what's going on, you'll see on the big blue lines there, that the blue, the sold units, is very similar to what it was in 2007. We're seeing the same sort of spring development that we had in 2007, except there's one big difference. The active inventories, represented by that green arrow, are significantly lower than they were in 2007. In fact, the marketplace has exactly half as many listings on the market as it did then. So same number of units, but half as many for sale. The market of tight supply, we've seen this pattern holding for the last 5 months. 2011 was a year of correction. 2012 is where the market gained traction and a little bit of appreciation. And now is where we're seeing the healthy appreciation, as you can continue to see the blue lines rapidly outpacing the red lines in terms of how the sold listings are outpacing the active listings. And so we thought it would be fun to have the blue line crash into the word appreciation on the far right of the screen there. This is also a representation of what makes buyers' lives so miserable as they're out there looking at properties. We're at 3.3 months worth of inventory. And if you go back over the previous 12 years in the month of May, you're just not going to find market conditions this tight. If you remember in 04 and 05 how everybody was buying real estate and it seemed like the market was this never-ending spiral upwards, we have less inventory to sell through now than we did then. Pricing trends. What you can see is that starting at the bottom, working your way up, the median price is actually starting to stabilize while the average sales price continues to escalate and climb. Now this previous month, we saw the average new listing price reserve itself, coming back just a little bit, slightly reduced down in value. And that slight reduction in value was an anomaly compared to what's been going on the rest of the years. There's a saying that we have with our clients, which is that sellers set expectations and buyers determine market value. Well, the sellers' expectations that they've been establishing for most of the course of this calendar year have been increasingly high prices. And in a marketplace of scant number of listings, they've been getting those prices. So that's one of the cases where the sellers have actually been pulling up the price because they've been setting the bar higher. And buyers who want to buy don't have as much choice but to say, sure, we'll go higher. This shows it a little bit more interestingly in the basis of the last 18 months worth of activity. So rather than looking out over the last 8 years, you can see just what's happened in the last 17 months, that the marketplace has moved upward in all 3 of those categories. Permit activity right now is as high as it's been since March of 2007. We had 308 single-family permits last month. We had 312 this month. That's a lot of permits. That's a lot of new construction. That's a lot of jobs being created in the construction industry. Finally, we're going to end looking at the individual MLS areas. And we have this first outlier, which is in Black Forest. There's 9.5 months of sell-through out there. And that's because there were 13 sold versus 124 that are active. But if you continue to the right on that chart, you'll see that the average sales price was up $80,000 compared to the previous month. And whatever did sell out there was obviously good product because the price differential was over 100%, meaning that the value of the sold price exceeded the list price. And then if you continue down the months of the time to sell, the months of inventory for all of the other MLS areas, you see lots of 2s, you see some 1s, you see lots of 3s. You're seeing tight supply in all of the other 14 MLS areas that we like to track. These are the areas that we work in frequently, and all of them have very low inventory and pretty rapid demand going through them. Moving further to the right, the price differential columns represented by percentages. What you're seeing again are 2005, 2006 style numbers, where 98.9, 98.4%, 98.5% of asking price is what sellers are getting. Now, we're still seeing closing cost concessions, which are not factored into that, but the closing cost concessions are even lower right now because the sellers don't have to negotiate as massively as they have over the previous couple of years. So those asking prices that you're seeing, in some cases, even if they appear to be unrealistic, you got to compare it to what else are you going to buy. And the last column on the right there is the average days on market. For the MLS, it's at 66 days. We've been used to seeing 80, 90 days for the last 4 or 5 years, and it's now at 66. And if you're looking at the 15 MLS areas that we track, it's at 62 on average. Now, that's a bit misleading as far as how average days on market works, because the average days on market doesn't stop counting and accumulating days until the property goes to pending or closes. And a lot of agents, like yours truly, use the under contract designation once they secure a contract against a property so that the marketing of the house continues on websites such as Zillow and Trulia and Realtor.com. It'll still display on the public side of the Pikes Peak Association of Realtor websites. And only once it gets the contract, gets past the inspection and gets past the appraisal, does it elevate on to the pending status. And that's the point when the days on market stop accumulating. Well, many agents go straight to pending when they go under contract, and so that would be an indicator of the average days on market number being accurate for their case. But quite a few of the agents use the under contract designation to continue the marketing of their properties. And because the number of agents continue to do that, you can probably subtract 15 to 20 days off of that average days on market figure to get a more realistic figure as to when properties are selling. So that's May. Give us a call if we can be of further help.